Good evening, traders. Today is actually October 1st, and I am doing this a little early because I have some plans on Sunday. I wanted to go over the market's big move last week. Let's take a look here at the S&P real quick, and then we'll go over some very interesting things. The markets have really broken downward. This was on September 20th, rallied back up. Markets looked like they were going to start to find some support, and then this entire week, this was Monday, Tuesday, Wednesday, Thursday, and Friday. You can see we've got deeper volume down into lows. We've got a deeper low here on the SPY. We still haven't closed below this low level here, this 428.87. But I need you to understand that the markets right now are in a decidedly weaker format. If we take a look at the longer term side of this, and we actually take a look at how this breakdown has transpired, we've broken out of this channel. We're back below my 440 level. We're seeing bigger volume, much bigger volume on this breakdown extended. We're seeing a decline in the on-balance volume. The moving averages have rolled over. So understand that they're pretty much rolling over. The longer-term moving average has not yet rolled over, but the shorter 20 period has. We really need to be cautious. This is kind of like a cliff edge. If you take a look at the markets, I'll show you a little something here. If you take a look at the markets here, and we just go over this scenario. From this area, we come up and we rally through here and get a pullback. And then we rally up and get a pullback. And then we rally up and get a pullback. And then we rally up here and get a pullback. And then rally up here and get a pullback. And rally a little higher and get a pullback. Rally a little higher and get a pullback, rally a little higher and get a big pullback. Now, from a standpoint of trading, we want to look at these areas here and say, okay, oops, well, that really wasn't a great horizontal line. Horizontal line at these lows, horizontal line at these lows, horizontal line at these lows, horizontal line at these lows. Again, my mouse is not perfectly horizontal, but what I want you to see here is all the way up. We get this stair-step type of pattern rolling higher through each of these rally phases after COVID. Remember, this was November, December of last year, right after the election, and this is the rally phase up. We have now broken the most recent rotation, and I want you to understand that we are beyond this low right here. So I'm going to try to draw a better line. We are now beyond this low. I'll get rid of this one. And this is what is concerning. This is telling us that we've broken out below this standout low. We've potentially changed direction. When the markets rallied back up to this level, back up above 440 on the SPY, we had a pretty good chance that it could be either way, which is why I'm warning that this is really a cliff. And what I'm going to show you right now is this is pretty much the cliff. So right here, if you take a look at these levels, well, there's two key levels. This low here, coming across there, and then this area right here with the two dojis. And the two dojis right here give us a pretty good indication of a cliff range on the market. So understand that this cliff range here, these two dojis are going to create a support resistance zone. And it's below the low of this standout low right here. If we fail early next week, Monday, Tuesday, Wednesday, Thursday, and start to see a deeper close below, let's call it 428.75, then we're decidedly in a bearish trend. The markets have changed direction. And that would mean that we're likely going to see some sort of a reversion. And a reversion, ladies and gentlemen, could put us down into the 380, down in this area, 390 area fairly quickly. Possibly even much lower. But we need to see how this plays out because we're sitting, dancing around this cliff edge. And if we're not careful, if there's any sort of disruption in the market this weekend, any type of extended concern, or consumers and traders simply are not prepared to re-engage with the market, we could see a breakdown here. We could see a fairly quick move taking out this level, and then possibly this level, and then possibly this level, which puts us back into this range, the electionary range. I said it that kind of funny, but the 2020 election range. And what that means, ladies and gentlemen, is we have support potentially down in this 365, 385 area on the SPY, and that would represent a breakdown of about 13, maybe 14% at this level. Okay, so now let's go take a look at something a little more interesting as we move forward. First off, I am going to show you the new TT scanner. So for those of you who love the TT scanner, I want you to understand the real strength of this system is being able to make your own trading decisions following this system. As I've promised, I colored the new flat triggers in this kind of a bluish gray color. So anytime a new flat or go flat trigger is generated, it will be now in blue for 1 bar, the current week that it's been generated. Then it'll go back to normal black mode, which means it was generated a couple of weeks ago or what have you. But the newer ones are going to be here in the flat mode, in this blue mode. That's the same type of scenario that we have with the new long triggers. I want to highlight the new long and short triggers as they're forming, which we don't have any this week. The markets have moved decidedly bearish, as you can see here. Everything has gone bearish, 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 bearish. We only have 1, 2, 3, 4, 5 bullish trends in the market right now. Pretty good indication that unless things change, we're going to start to see some really big rollovers and rotations. You can see that we have only 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 down here to the ITA symbol, bullish trending signals in our ranking system. Everything else is neutral or bearish. And additionally, we have the new thrust pattern. And the new thrust trigger is something I want you to pay very close attention to. What it's designed to do is measure upward and downward thrusting of price, giving you some clear indication of how markets are trending. So we have this indicator here, this higher in an uptrend, lower in a downtrend, higher in a downtrend. We also have lower in an uptrend. So we have different trend continuation here based on the moving averages. The new thrust indicator is something completely different. I built this to try to generate some confluency in how this works. So what would happen is we go from a neutral, which is this bluish color. We go from a neutral potentially to a bright red or to a bright green. That would mean that we have downward, new strong downward trending in bright red, or new strong upward trending in bright green. And when we get into this new upward trending, this is essentially a new potential upward or downward initiation in trending. Then as the trend spikes, as it builds acceleration, think of this like hitting the gas pedal going up or going down. If it's green, it's going up. If it's red, it's going down. There's actually 2 of them right here. So, and these triggers are, they're new enough. We can actually use them. So this one is now trending downward. It has been in a trade now for 6 weeks. This is the aerospace. It's in a short trend. It's been in a trade for 6 weeks. It's got 0.77% profit. It has reached the first target, and it is still in a downward acceleration trend based on the thrusting indicator. So what we're doing is we're seeing the thrusting downward indicator telling us that this is a downward trending market right now. It is in the acceleration phase of a downward trend, and we've got a very clean short, very close to our initial entry price level. We're likely to see it actually begin to move lower if this trend continues. This one is in an upward trend. You can see this is long. It is currently 1.74% in the profits. We have a new thrusting upward, or a continued thrusting upward. We can't see what it was like last week. It is telling us that we are higher in an uptrend. We're still in this -2 ranking, and it's in warning as far as distribution. It's been in the trade for 15 weeks. Hasn't really gone very far. It's hit the first target, hasn't hit the second target. It's trading at $238.88. We still got about $25, $18 before the second target. and our stop is only $8 away on this. But the idea here is that once it goes green, it'll stay green as trend is accelerating. Then it'll move to darker green color, this one here. This means that trend is still accelerating upward, but not as aggressively. So think of this as really flooring it, hitting the gas. This is, okay, we're cruising along, still hitting the gas, accelerating. And then as soon as we go to blue here, that means that we are now trending with whatever the trend potential says. In this case, it's long. We are now trending, but we're more so coasting, not really hitting the gas. The same thing here with the red. You go from red, which is accelerating, really hitting the brakes. So think of it as one is hitting the gas going upward, one is hitting the brakes, slowing down, going backwards or stopping. In this case, this means we're accelerating going down, and then it'll move to this purple color, which means that we're still accelerating downward, but not at a great rate. So this is really accelerating downward. This is moderate acceleration downward. And then eventually it'll move to the neutral color here, which is the blue. And when you get into a blue mode, like in this case, this is still telling us, the numbers are internal, telling us, you know, ranking, up, down, what have you. So in this particular case, we're 92. We've hit both targets, been in a trade for 69 weeks. It's long. It's giving us a warning signal. It has moved lower on the shorter term moving average, so it's kind of weakening here. And this has gone into a neutral mode here. Eventually, we may be getting stopped out. Stop is at 335, currently at 360, so this could get stopped out next week. We'll see how the markets actually trend. So when you look at this whole scenario, this is designed to give you better potential triggers. If you're in a trade like this one here, brand new, XLI, 2 weeks old, it's bearish, it's short, everything's lining up, negative, negative, first target's already been hit, but it is in moderate neutral trending. Okay, this one is 72 weeks old. Let's find a newer one right here. Bearish, short, higher in a downtrend. So here we go. Hasn't hit any targets yet. It's minus 1.39% since entry. So it's taking a little heat, but it's indicating a fairly strong bearish downward trending in thrust. This tells us that essentially this is moving more aggressively to the downside than, say, these. These are moving to the downside. They're more so just moderately moving to the downside. This one is moving more aggressively to the downside. This one here is moving more aggressively to the upside, whereas these lighter green colors, or I should say darker green colors, are moving more moderately to the upside. So this gives you the idea that you can start taking trades and ranking them in a way that sets up. So for example, this one way at the top of the list, IYG Financial Services, has been long for 59 weeks. It's hit both targets. It's at 191.94, stops at 152.30. I've got to spread this out, but it is thrusting upward. It's starting to move dramatically back to the upper trending, which means that you have another chance of a rally phase here, depending on how this plays out. And this is going to basically feed into all of these different cycle trends. As the TT scanner becomes more of a resource for you, you're going to be able to follow these triggers, follow the new trade setups, look for thrusting to take place. You want thrusting to show up as bright red or bright green. That means you're getting extreme thrusting. When you get into darker green or this purplish color, that means you're getting moderate. Green being moderate upside trending, purple being moderate downside trending. And then this bluish aqua color is more of a neutral trending, just kind of coasting along. So when you get into this aqua trending color, like right here, it is long, it is neutral, it's been in the trade for 69 weeks, it's hit both targets. Our stop is at 118.47, it's currently trading at 127.33, but it's just neutral. Think of it as it's not really trending higher, not really trending lower. Okay? So let's go ahead and try to use this to our advantage. And remember, we're in a mode right now where everything has turned decidedly bearish and neutral throughout the system. There are still a number of longs throughout the TT scanner strategy. And these longs will be looking to start getting out of trades here pretty soon. A lot of these have been in trades for 60, some of them even 70 weeks. I saw one in here. Where was it? Right here. This QID has been 72 weeks in a trade. Here's one that's 69 weeks in a trade. I mean, these have been some really great trades. 41% profit, hit all the targets. You can see it's coasting along sideways. We don't have any trending. It'll eventually move if it breaks down into this red or purple color, showing that we're getting a real big breakdown. Okay, so now let's go to the charts. Try to get the charts over here. This week, like I said, we're dancing around a cliff. This is the Volatility Index. You can see here that we're, I am going to have to close this and come over here, come over here, and come over here. Let's start with this one. Okay, so this is the current Volatility Index. You can see we've weakened dramatically. Remember, many weeks ago, we were pushing up into this 15, 16 level, and I was telling you how this is really, really overbought. Now we've seen this roll over here. You can see it's from a higher peak to a lower peaks to now a lower area over here. This is really quite concerning. We need to watch this level here. If we do get a breakdown, we could very quickly move back into the 6 or 7 area. We could just as easily see more support and try to see this trade sideways in this 12, 13, 14 area, possibly trying to move a bit higher. But we've definitely changed direction. Instead of trending upward now, we're trending downward, which is starting to get a little bit ominous. I'll go this way. This is the Commodities to Gold Index, and this tells you that we're seeing the commodity cycle kind of depreciate. We still have a number of commodities that are much higher now. And this is putting pricing pressure on manufacturers and distributors and suppliers. And this is going to play out as an inflationary process through commodities, likely probably till March or April of next year. The lumber trade to gold has kind of blown off already and kind of weakened, which is how I built this. But long and short of it, we're starting to see some consolidation down in this 4 to 6 range. This tells us that we're getting back into a little bit more normalcy, but I still believe we could see this fall all the way down into this 1.3 to 2 range if the markets really start to react to pricing pressure. Remember, supply and demand indicates that as price accelerates higher, demand will weaken, and what will end up happening is price will be forced to adjust to weakening demand. So understand that there will come a point in time where consumers and or suppliers say enough is enough, I just won't buy it right now, and or look for other sources or try to get their own sources to cut out the extended pricing. And we're probably nearing a point where within the next 90 days to maybe 120 days, we could see this whole commodity rally thing kind of blow off and really kind of dissipate. The valuations index has continued to move lower. Again, this is primarily because of yields. Yields are moving higher. This is a bit of fear in the market, a bit of uncertainty. The Fed really needs to come in and settle things. Congress needs to come in and really settle things to try to clear out some of this uncertainty and fear. Until then, I believe this volatility and this sideways price action is going to be with us for a while. We could see a big breakdown. Like I said, we're very near to a cliff. The metals index, we had this really big breakdown last couple of weeks, and we've got these double bottoms. I'm really inclined to say that this is very, very, very close to a big bottom. We could see it break down below this level. I hate to say it. We could see, if the markets really collapse, if something big happens, we could see gold and silver react by coming down, kind of like we saw right here with COVID. Big collapse down to new lows, and then it rallied back up. But if the transition takes place more orderly and there is no chaos, then I think we're going to see gold and silver start to transition, particularly if yields and fear starts to rise a bit. The smart cash index has moved decidedly lower again. I drew this line here for you to pay attention. This is the cliff in the global markets. You can see we've broken through this channel. We've reached our peak back here in February. We've come decidedly lower. We've rolled lower again last week. And what I need you to understand, ladies and gentlemen, is if we get below this cliff, if we get below this 182, 181 level in the global markets, we could see a very big move back down into this 140, 150 area. And remember, that would be, if I do my math correctly, that'd be about 40 points on 180, so that'd be about a 25% downside move. Okay, and then we have the U.S. stock market index. The stock market index is testing and dancing around these lows around this channel. We've already broken this pink line channel. We're getting ready to test the lower levels of this sideways flagging formation. It's going to be very, very interesting to see what happens. The RSI level has already started moving lower. We're dancing around this Fibonacci price amplitude arc, which, remember, I was very concerned about this one over here and this one over here being potential topping patterns. But this little guy might actually be the one that breaks us. We got to see what happens here. The more it confirms around this arc and starts to move lower, the more likely we're going to see a breakdown pattern. Obviously, if it breaks back above it and starts trending higher again, then we go back into this channel and continue to flag out a bit. And then this is the Fangs Index, and you can see the Fangs Index has broken not to new lows, but you can see we have another cliff level right across here, right across this 1135 area. This is really what I'm saying. We're dancing around a cliff. If you think of this as the cliff edge, it becomes very, very clear that if we get to see any unusual activity next week, anything over the weekend, any chaos, any concern, we could see the markets really break down and try to flush out a low, which means that we could see this move from, say, 1152 down into this pennant formation, which would be 950. That'd be about a 200-point move. And that would put us at around 18-point move, 18 to 20% downside move in Fangs. If we got lower, it could be a 30% move, maybe back down into these lows. Now remember, this is the COVID low. This is the election area right over here. So it's not uncommon for us to see this particular move down into 900, 950, which would put us right in this election area consolidation sideways move. This would actually be the next major area of support. And I think that's it for the charts. Yeah, that's an older one. Okay, so let's come back over here. We've gone through the SPY. Let's come over to, let's come over here. Let's go through the trade tank. So SPY is bullish weekly, bullish daily, no color changes, no change in trending. We're basically still continuing on this upward trending. The NASDAQ, which has been quite a bit lower over here the last week or so, still bullish weekly, bullish daily, no major trend change. The Dow Jones Industrial is bullish weekly, bullish daily, no major trend change. Transportation Index is bullish weekly, bullish daily, no major trend change. The gold is bullish weekly, bearish daily, still the same as it's been pretty much for the last couple of months. Silver is bullish weekly, bearish daily, but notice we have these pinks here. These pinks are the early warning indication that trend is starting to weaken on the bullish trend side. So the next phase would be to move into some sort of a bearish trend if we get enough confirmation. We could still stay many weeks in this area, but pinkish means we're getting very weak on the bullish trending as far as silver. Now, to be honest with you, I love $21, $22 silver. I'd love it even better if it got to 16, but I still think we're going to, if fear pulls into the market, metals should start to move higher as long as the dollar doesn't start skyrocketing. Let's go to the XLF. Oops, let's go to crude first. Crude is at 75.74. It is still bullish weekly, bullish daily. It's been yellow on the daily chart, yellow on the weekly chart. This is moderate weakening of the bullish trend. We're up here near this resistance level. It could break out and go up a little higher, 82, 84, but I do kind of think that we might see some resistance here, especially if the markets break down. Kind of like what happened with COVID, even though it's a for example, we had this crazy wild breakdown just before COVID and during COVID right here. And if there is some sort of a breakdown in the markets related to COVID restrictions and or expectations, we could see oil move a bit lower. We really got to just kind of wait and see here with oil. We're dancing around this $75, $76 level, and it's clearly a peak area that I've drawn in here many weeks ago. We really need to see what happens here. Could break above it, try to rally to 82 to 84, or could find some immediate resistance and try to move lower. All right, so let's go to the SPY. Is bullish weekly, bullish daily. Notice the light green color changes here. This is starting to get a change in trend color. You can see we had one back here in October of last year. We could see this just bottom out and rally back up off of this point, but we're getting quite a bit of weakness. So like I said, we need to kind of pay attention to how traders perceive this, and it does come down to perception. Do you believe that the markets are going to continue to rally 14 to 15% or more over the next, say, 15, 16 months? Or do you believe the big rally we've seen since the COVID bottom has exhausted itself and we're due for some sort of a moderate pullback? If you believe we're due for some moderate pullback, where would that pullback be? Would it come down to the COVID highs? Would it come down to the midpoint of the COVID pullback? Or would it come down to some other level, somewhere over here? Maybe we can find this area as a sideways consolidation phase. Where would it go? If it's going to pull back, remember, markets typically do rotate and pull back. It's very unlikely that we've had this extended trending with no more than a 6 or 8% pullback for an extended period of time. Eventually, markets will generate some 14, 15, 20% pullback, reestablish a low, and start to move forward. Remember back over here, 2018, we had this moderate pullback, then it rallied up just barely. Then we had a very deep pullback, rallied up, stalled, a little higher, then this was the 2019 rally before COVID. So where is this going to stall? Is this it? Is this the pullback? Or is this just a blip in rotation and it's going to continue higher? Really interesting. We're kind of at a very interesting cliff mode in the markets right now. And you can see, as I showed you earlier, this deeper low this morning, very indicative that the market is testing new lows, testing new lower price areas, and then decided that it wasn't time to move down this week. Could be next week, could be a week later, or it could start to bottom and start to rally from this area. But we just don't know yet. Okay, financial sector is bullish weekly, bullish daily. You can see we had gotten into this deeper low period. It's recovered quite a bit over the last week. We would really have to see this break down below, say, 35, 50, 36 to be concerning, very concerning. But right now, we just don't have it. We are yellow, which is moderate bullish trending. And let's go to IYM or IWM. This is the Russell 2000. We are yellow, bullish daily, bullish weekly. Still no change in trend. Let's go to the MC. This is the mid-cap 400. Still bullish weekly, bullish daily. Let's go to TNA, which is energy. Small cap 3X index. We are bullish weekly, bullish daily, pink over here on the daily, which shows more warning and weakness. Let's go to IYT, which is the transportation index, is bullish daily, bullish weekly, yellow on the weekly chart, pink on the daily chart. Very, like I said, just really watching this cliff set up in the markets, like it doesn't know what to do. SSO is bullish daily, bullish weekly, yellow on the weekly, pink on the daily. And let's see what else we have here. TLT is bearish weekly, bearish daily. We've seen quite a bit of a pullback. This could actually turn around very quickly, the bonds, and start to move higher. We've got to see how that works. And then let's take a look over here at retail or real estate. Real estate is still bullish weekly, bullish daily, pink on the daily, really close to a cliff breakdown. Look at how deep this has pulled back. We got a rotation here to a rally peak in early September, come down, bottomed, come back up, barely made it up, and really started to weaken here. Real estate could be in for a big change over the next couple of weeks if this thing breaks lower. So we need to kind of see what happens. So now let's take a look at the EFS tools, TT Charger. We are going to go to weekly S&P. You can see it right over here, deeper, still bullish, moving downward deeper, no change in trend, still bullish. NQ weekly, bullish, no change in trend. The Dow Jones Industrial is bullish, very close to the bias level. No change in trend. We want to watch this 32,835 roughly level. Transportation Index has gone into neutral trending. So again, we are still basically bullish. We have no change in trend yet. We have gone neutral. The direction of the bias line has changed to red, indicating that it looks like it's setting for potentially a downward trend. I gotta look here real quick. Yep, nothing really changed. So essentially, we've got to watch this level. This tells us last week that this level has been broken, which is why we've gone neutral. It's been breached by these lows. We could get a big change in trend coming up. SPY is bullish. Still no change in trend. The XLF is bullish, no change in trend. IWM is neutral. Gone neutral. It looks like it has rolled still green on the bias lines, meaning bullish. It has gone neutral sideways, very tight range. We would be looking for a breakdown below 209 at this point for some sort of confirmation. Mid-cap is neutral, looking for a breakdown below 225.40. IYT is neutral, looking for a breakdown at this point below 245.50 roughly, 245. And you can see this is a perfect example of the cliff. Here you go. There's the cliff right here. Draw it as cleanly as I can. That's the cliff level, roughly. So what we're looking for is that area. If that rectangle area gets broken, if IYT breaks downward over the next couple of weeks, we could be looking at a pretty big downside move, guys. SSO. So still bullish. We don't have any real cliff level indication here. And let's come down here to bonds. Bonds are neutral, bearish, neutral. So we're back above this range. We've seen enough of a pullback on this weekly chart to move away from this pink trending area. We've seen a downward trend. You can see that the bias lines here have turned green, which is indicating that we've left a bearish trend and now we're into more of a neutral trend. We really kind of want to pay attention to this area here, which let's call this our ceiling. A move above 152 is going to be a very good move for bonds right now to the upside. Continued downward trending. If we get into more downward trending, this will likely move back into bearish trending. We're just above the bias line, which is right here, these two green lines right across here. Let's see, what else can I look at? Well, that's pretty much it for now. We do have, like I said, we do have a very interesting setup with this cliff. So the SPY, let me come back over here. And like I said, this is really strenuous for a lot of people. There's been a lot of money moving out of markets. You can see in the volume up there, a lot of selling volume getting away from this potential rotation. And the reality is traders are quite fearful that Congress isn't going to do their job. They're not going to follow through. Spending is going to become an issue. and they just pretty much kicked the can down to December 3rd. We've got China issues going on. We've got potential debt collapses. We've got rally in commodities. The U.S. dollar is strengthening. I believe the U.S. dollar is strengthening for one reason and one reason only, and that is that if all hell breaks loose, God forbid, then the U.S. economy and the Federal Reserve are going to be probably the strongest asset class, currency class on the planet over the next couple of years. Now, who knows what's going to happen 10, 20 years from now, but if there was some sort of a pullback, if China were to have some credit debt issues, some bankruptcy issues, if the global markets do continue to roll over, then the U.S. markets would most certainly pull back and revert as well. But there would be a huge push of assets into U.S. markets, expecting the Fed to push even stronger buying of assets and push the markets back up, which would push more and more money into the U.S. equities and create a pretty good trend. So we've got to kind of see how this plays out right now. And it's very, very interesting that this cliff is set up and left us in an early October kind of a sideways holding pattern. So be prepared. We could have some very interesting moves taking place over the next couple weeks. All right, that's it. Have a great weekend. Talk to you later.